Grüezi. Hello and welcome to this brief introduction to the basic principles of accounting for value-added tax. Understanding the basic principles of VAT systems is a prerequisite to this lesson of accounting principles. In this short video, you will learn about the VAT compliance process and how it is reflected in General Ledger. So let's start with establishing the basics of the VAT compliance process. The VAT compliance process can be seen as a continuous cycle of four major processes. The cycle begins with business transactions. The vast majority of business transactions are purchases and sales, and almost any other transaction can be considered similar in nature to either purchases or sales from a VAT point of view. At the end of a tax period, tax returns need to be compiled and reconciled. Once the tax return has been completed, it needs to be submitted. The reported numbers are input to some accounting entries and payment procedures. There are many more activities within the compliance process, but these four processes are main input to accounting processes. Now, let's have a look at the accounting entries step by step. We will record 3 business transactions and take those as the example for a tax reporting period. First, we record a sales transaction whereby the net sales price of the product or service is a credit to the revenue account. The calculated VAT amount of 7.7% in this example of a sales invoice with Swiss standard VAT rate is a credit to the account VAT payable under short-term liabilities. The total or so-called gross invoice amount is posted to accounts receivable under current assets. Nowadays, this and all the following journals are automatically created by the ERP and accounting system when an order is processed and finally invoiced. The VAT amount is compiled by means of VAT rate codes with associated accounting rules. In this example, we defined the 7.7% standard rate for sales with VAT code A. This journal records a purchase of products or services at the Swiss standard rate of 7.7%. In this example, the net purchase price of the product is a debit to cost of sales. It could well be recorded against any other expense account depending on the nature of the acquired product or service. The calculated VAT amount is a debit to the account VAT receivable under current assets. The gross invoice amount is posted to accounts payable under short-term liabilities. Systemically, the VAT amount is compiled and recorded based on the configuration of VAT code B for purchases at Swiss standard rate. So let's see how GL is affected by the entries. The purchase and sales transactions created assets and liabilities for VAT, whilst revenue and cost of sales in P&L remain unaffected by VAT charges. In this last example of a business transaction, we have a closer look at the acquisition of a service requiring self-accounting for VAT. Place of supply for the purchase of this service from abroad is deemed to be Switzerland, and hence the charge is subject to Swiss VAT. Reverse charge and self-accounting for VAT is a common procedure known to most VAT systems. In the European single market, the reverse charge mechanism is also applied on cross-border trading of goods. So let's check the accounting entries. Net price of the acquired service is a debit to cost of sales, or as said before, to any other expense account. Because the invoice is net of VAT, the gross invoice amount equals the net amount and is posted to accounts payable. To account for reverse charge, we configured VAT codes C and D, compiling the VAT amount and triggering the posting of a debit to VAT receivable and a credit to VAT payable. Now let's check the GL and assume it reflects the balances at the end of a VAT reporting period. VAT receivable balance is at 53.9 and VAT payable balance shows an amount of 92.4. Every modern ERP system provides a VAT report based on VAT rate codes compiling the net VAT amount payable or receivable for defined VAT periods. In our example, we find VAT payable of 92.4 based on revenues of 1,000 Swiss francs defined by VAT code A and reverse charge reflected by VAT code D. The report also shows VAT receivable or so-called input VAT of 53.9 based on local purchases defined by VAT code B and reverse charge reflected by VAT code C. VAT payable minus VAT receivable results in a net VAT payable of 38.5. Practically, the net result could well be negative, and instead of paying VAT, the company would submit a claim for VAT. How the figures are to be presented on the tax return varies country by country, but the basic principles remain the same. Before completing the tax return, the numbers from the VAT report need to be reconciled with general ledger balances. In our example, the balance on the VAT receivable account matches the total VAT payable on the VAT report. The balance on the VAT payable account in GL matches the VAT payable amount on the VAT report as well. So we are confident reporting correct numbers. Only in a perfect world we won't find variances, but in reality variances between VAT reports and general ledger balances appear every now and then. Reasons may be timing, manual entries on VAT accounts, or false system configurations. Variances always need to be investigated, understood and rectified before reporting final VAT numbers. Eventually, we need to clear the general ledger balances for the reported period and record the reported net VAT amount in the net VAT payable account under short-term liabilities. This is done by recording a debit to VAT payable, a credit to VAT receivable, and a credit to the net VAT payable account. For experienced accountants, it is obvious that if the VAT receivable amount would exceed the VAT payable amount, so resulting in a net VAT receivable position, the net receivable amount would be recorded to the net VAT payable account by booking the amount on the debit side. The balance of the general ledger at the beginning of the new tax period shows zero balances on VAT receivable and VAT payable accounts, whilst showing the VAT liability in the net VAT payable account. Basically, there are two types of payment procedures for VAT. Either the payment is facilitated by a tax invoice and flows through accounts payable, or the amount due is translated into a bank order directly, like for example through a direct debit on the bank account by tax administration. Eventually, both procedures clear the balance on the net VAT payable account. The example in this presentation was just to explain basic principles of accounting for VAT and has been dramatically simplified. Complex business models add complexity to VAT accounting. This is a list of elements adding challenges to accounting procedures. It starts with deviant accounting and tax periods. This doesn't sound very complex, but practically it can be very challenging managing multiple calendars. Many companies hold assets in various countries, hence need to register and account for VAT in multiple tax jurisdictions. Other examples affecting VAT accounting procedures are VAT groups and businesses with reduced VAT recovery like insurances or healthcare providers. Also, additional reporting requirements need smart translation into accounting procedures and reporting. Eventually, mergers and acquisitions as well as business restructurings take their toll on accountants. But don't worry, here's some guidance to address complexity in VAT accounting. Structured and standardized accounting procedures help to better and easier understand balances in the general ledger. Structured and standardized master data helps avoiding mistakes and facilitates automation of standard processes. Automated standard processes help to identify exceptional transactions and focus on correct handling. The process works even better if handling of non-standard and exception procedures is cast into the organizational structure. Constant monitoring and robust control procedures help to avoid errors and also force better understanding of movements in the general ledger. And eventually, adequate documentation of processes and procedures with respective training are not removing complexity but help understanding it. I hope the time spent on this video was worthwhile. If you need assistance improving your business processes or just wish a tailor-made training, I'm happy to take your call. Thank you, auf Wiedersehen.